Right, lads and ladies, let's get into it. Today we're talking about quarters theory and whole numbers. So, what is quarters theory and what are whole numbers? Quarters theory is basically the idea that price moves in quarters at a time. So, for example, say we have from 100 to 200, your first quarter would be 125, your half or your midway point would be 150, your third quarter would be 175, and then your end point would be 200 quid. Why we look at these levels have significant importance when we're looking at price discovery, new all-time highs and stuff like silver and gold and stuff like that. And you don't use them as much as you would. You'd use more whole numbers with currency pairs. Why? Because the odds of a currency pair going to a new all-time high is very slim. But the odds of gold or silver or whatever the commodity you may be trading going to an all-time high, Bitcoin or something like that, it's a lot more probable. So when we're talking about price discovery, we try to talk about quarters theory because we can't look left to get right. If there's nothing to the left, we can't target anything that's not there. So we need to create a target and then target it. And that's basically what your quarters theory is now. As always, the course is going to be left down below. Have a quick read through yourself. I'm just going to have a quick scan. When we're talking about currency pairs, for example, EU, like I said, you're not going to have a currency pair go to price discovery. Not very often anyway. It doesn't mean it's impossible. It means it doesn't happen very often. So if we can always kind of look left to get right in terms of seeing what conferences you have, fair value gaps, order blocks, liquidity levels, liquidity pills, whatever have you, support, resistance, whatever it is, you can look to see what's on the left side of the chart and estimate what's going to happen on the right side of the chart. Looking left to get right is a phrase in trading. But if we already know what's left and we have, for example, your conferences, you have a fair value gap, and we'll get into the chart in a minute and have a proper look at it. But another way you could identify entry or exits would be through whole numbers. So all a whole number is it's just a psychological level. It's just a psychological barrier that some people say, right, well, I'm going to get out of this trade at 1.1000, or it might be 1.1250 or 1.1500. It's more important just to know people don't try to get out at 1.14263. It's just a weird number. It's a weird number to try to get out or get into a position at. Whereas if you see 1500, you're more likely to get in or to get out of a position or something like that. When you're looking at your NT5, you say, oh, if there's no liquidity pool or something like that or whatever, if you're not targeting a confluence, you may be targeting a whole number. And like that, it's just a psychological barrier, yeah, essentially, where you're looking for just what's easy on the eye, what the eye is trying to see. And if you see 1500, or if you see 1.250 or 1.230 or 1.270, you'll be more kind of drawn to pull your take profit, stop loss, entry, whatever have you, to that whole number level, rather than put it at, for example, here, rather than put it at 1.2263.4. Know what I mean? So that's basically what it is. We'll jump in and have a quick look now on the chart. We'll have a quick look at quarters theory first off. Now let's see if we can find a clean chart. All my charts are manky. You can go through and sort them all out. Saxo. Right. Let's just, for example, go back to. We'll just go back to. Where's Handy? We'll go back to here. So at one point, this was your all-time high on gold. And I just want to draw up a quick, I'll show you how to get the box up as well. That's a bit mad, isn't it? Never seen that before. So when we're looking at quarters theory, it's best to put, it depends on really what currency, what commodity or whatever may have you that you're trading. You can use it in indexes as well. They'll move in points. So you pull it from the high, the all-time high, to 1,000 points or 1,000 pips after that. So, for example, with gold, we're going to put it over because we've seen it drop down a little bit. I'm just going to give you a quick example of probably a couple examples. Right, so we started there at 155.50, so you want to go to 1650 in and around there. Now, I have a funny feeling that's going to be way too small. Just give you a rough idea. That price halts and price halts, slows down, or reverses around these points. So let's have a quick look there now. If we drop to 15 minute, maybe 20 minute, maybe. Let this play out. Surely 10x isn't the fastest that goes. Yeah, here we go. Here we go. We're starting to make way back up. So if you don't know what to target, you can always just pull a box up. I'll show you how to create the GAN box. It's called. Create the GAN box, split it into 4 sections, pull it from a high to 1,000 pips or 100 pips, depending on what you're trading. But realistically, 100 pips is going to be too slow. So let this play out. That's choppy price action right there. There we go. And now this is on a 30 minute, so we just drop down to 15 and make it a little bit easier to see. So you see we broke through the zone with a lot of pressure. This was the previous all-time high. Broke through, came up, tested the 50%, came down, found a bit of support around that 250, around that 250 pip quarters level. Paused around here for a bit, got a reaction of the 500, sorry, the 50%. Then came back down, retested, back up, broke past it, and then if you can see here, if I zoom in, you can see we broke past it, got a bit of a test here, and then back up, and then a bit of choppy price action here, but you can see fairly clearly that reaction, breakthrough, test, bang, bang, test, and then you can see we just potted in around this down here now for a minute until we broke out, tested the midline again with this little red candle, back up, tested this, back down, tested the 250, and you can see that we just linger in between this zone. And eventually stay in between these zones for a bit, back down, test this level, break through, back, test the full point, and then go back up again. Now I'm just going to run through a quick example in just to keep these videos short enough. Just don't want to lose our attention span, but you get the gist. And even if we go back now to live and go live, let's go more closer to the dates that we're at now. I'm looking for a 5,000 level now. 5k, 5k, 5k. This is just a quick example. Like I said, run through and do your own, break through your own, have your own look at it. But basically, just when price comes and hits these whole numbers, you tend to halt for a minute and then react, retest, react. It's just like that psychological barrier. Like if you have, they're not going to delete it. If you have an entry and you could enter in a, I think I just done it a minute ago. Oh, it was an entry here actually. 5,100 it was. I'll show you on this chart actually. This was an entry I had yesterday. Now the chart's a bit messy, forgive me. You can see you have this level that when we came up and price reaches 5100, we got a reaction. 5100 got a reaction. 5100 got a reaction initially and then broke past it. And then when we came back down to 5100, you got that same reaction. Why? Obviously, the significance is not only a whole number. That's not the only reason that price came down. Excuse me, and then broke past its own, because you have these confluences around the side. You have your, have a quick look through it. You have your 4-hour fair value gap, bang bang. You have your opening gap. You have this psychological level that we kept happening off continuously. Broke past. Oh, sorry, reverse, came down, reacted. You have, I think it was a 15-minute order block. Early order block. Oh, that's not. There you go, 15 this one. And you had your golden zone. So obviously you won't use only numbers. You obviously won't use whole numbers on its own, but you can use whole numbers alongside other confluences in order to get that extra confluence to give you more confidence in your trade. So like I said, go through and have a look anyway yourself. I was going to go through Euro USD here as well, but I just don't want to be keeping this too long for something that's not as important as other things. So we have a quick look anyway. Pepperstone. Right, let's just see where we got a reaction from first off. So if you see, you have the one is always going to be the same. The one in front of that's always going to be the same, but it's kind of the 774. So look for that to maybe say 750. Look for that to say 800. Look for that to say, 1-800 or 1850. You know what I mean? You get the gist. Keep it in the back of your mind. Don't. Again, it's not one of these things that we dwell on too much. It's just kind of something that's important to know, because I wouldn't use it just as your only confluences to get into a trade. Of course, not that silly, but use it alongside other confluences, and it will help you get into a good trade. So that is quarters theory. See what this trade is up. What are we looking like? Not too shabby at all. Not too shabby. Look, I'll leave this that now. That is quarters theories and the whole numbers. The course will be down below. Have a look through yourself. Like I said this before, don't only wait for me to go through on the chart. Don't only wait for me to go through on the course. Have a look through it yourself. Break it down yourself. The link for the course will be down below. Any questions you have, I'm not a hard man to find. Fire them away. Ask any questions at all. Like I said, if you ask a question and I can answer it, or if you ask a question but I might not have had that question, that's very bright. I might not have had that question, but somebody else might have that question. So ask the question. I'll try to answer it best of my ability. If I don't know, we will find out together. I can guarantee you that. With that, I will see you in the next video.